Let's kind of just get your take on what's happening in these markets right now. Stocks certainly under pressure. We've just seen the Chinese markets enter a bear market. Europe doesn't look that clever at the moment. Even the US markets are being affected by this. Are investors overreacting to the trade story?
I don't think so. I think it's an incredibly difficult one to compute. I mean, we've been used to decades of global free trade, and now the idea of something quite different. Markets aren't that great at inflection points. You know, what does it all mean? It's very hard to model scenarios. It's all around the politics. We should be used to that by now, perhaps, in terms of the impact of politics on markets. But it's still a very difficult one to compute. I don't think it's all going to go south. I think it's going to be one day of panic, and then the next day somebody will say something that's, you know, calming. And we're going to be into choppy waters. But for several years, obviously, we've had markets really disregard any kind of potential bad news and just think there's only one way to go, and that's up.
We still, Helena, I often like to compare the main benchmarks in the U.S., Europe, and Japan in valuation terms. And I've got this here. The U.S. Gets a higher valuation at 17 right now. Europe is at 14. Japan is at 13.5. Does this still make sense to you? I mean, it stayed this way. This chart goes back 5 years for a relatively long time. Does this still make sense to you in light of Trump's trade war?
Well, as I say, I think it's maybe all up for grabs right now, but certainly, of course, we've been used to the US having stronger growth over that quite a sustained period. And it has seemed, I mean, I think one of the things that I've always loved about America is a real can-do entrepreneurial spirit. And certainly there's been a almost conscious, you know, let's get on with it. Let's just plow through some of the headwinds or the difficulties that we've had in the way. So I think it might be a time for a bit of a rebalance, but still America has something of an edge in a way it approaches and is so confident with the rest of the world.
Why did we get it all wrong so early on in the year, though? We were, like, last year into this year, the dollar's going down, Europe's on the front foot. That ain't happened. Well,
I think you'll find if you look back, I mean, always January, we get it all wrong. I mean, as a consensus, we go into the year and everybody's kind of tail end of last year, carries on, extrapolates the past. And of course, no one else has perfect foresight. No one has perfect foresight. So I think we just need to accept the fact that we're all fallible and be quite a bit less gung-ho about our expectations.
But it's the place to put your money, the United States right now, as we've just been discussing. Is that can-do attitude the place to invest in? Europe feels like it's really struggling at the moment.
I think there are great companies throughout the world. I mean, I think that's if we obviously at Legal & General have both active and benchmark index funds, but actually I do think it's a time where the big themes, technology, energy, the switch into more renewable energies, these are going to create different winners and losers in the past, and you're going to have companies listed in different markets that are winners. So I think you have to take a really global position and analyze companies for what they're actually doing.
If I look at, Helena, the fixed income side, I'm fascinated over the last few months by the amount of return you can get at the front end of the U.S. curve. For example, 2-year bonds are yielding 2.528%, 3 years 2.611%. That's just so much more than you can get throughout Europe. Certainly, most of the European yields that short or German yields are negative, and in London it's only 0.7%. Do you think investors are right to go over to the U.S. and buy this debt, especially as the dollar continues to appreciate?
Well, it's hard to argue with it. I mean, I think negative interest rates, or pretty much no interest rates, really changes the dynamic around investing, and it's very hard to make the case, I think, for investing in European bonds.
How are you feeling about Brexit?
Well, you know, it's a bit uncertain, let's put it like that.
You were quite positive for a while.
I am. I remain of the view that actually can all be really good for the country, but clearly, and not just for the country, I want us to have a good relationship with the EU, with Europe going forward. I think we were always in an awkward position before the referendum. We had to sort out where we were going with our relationship with Europe. Clearly, at the moment, the negotiations, at least from what one can see in the press, is not going exactly according to plan. And I think, but there are things happening, I believe, behind the scenes that aren't aired in public. And sometimes we need to have a little bit of faith.
We do see, yesterday we saw some news out of BMW thinking about moving out, even if they then came back. You can see why they would consider it to begin with, because if there's no deal, they face such huge tariffs on the parts that they'll need to import to the UK to build things, and then on the products that they need to export from the UK. Airbus and many other manufacturers are in the same situation. And I was just checking, auto parts are one of the worst sectors in the stock 600 year to date on the GRR screen. Do you sell things like that in light of the damage that could possibly be done with no-deal Brexit?
Well, clearly, as we started the conversation, there's also issues around trade and tariffs globally. It's not just restricted to what's happening in Brexit. And I do think one of the things that we need to bear in mind is that this is one issue among many that manufacturers are having to deal with and contend with. We obviously have talked a little bit about technology, shaking things up. Clearly, car manufacturers that are embracing electric vehicles, that's a whole nother dynamic and how that works out. So I don't think you can look at these issues in isolation.
How you are less optimistic now than you were. I remember talking to you about a year ago, and you were kind of really quite optimistic about Brexit. What is it that has changed your view? Is it the British side of things and the lack of progress that is being made, and the lack of clarity that is providing sort of an absence of a plan? There is no plan, it seems, at this point. Or is it you have a sense that we're being punished? What is it that's sort of...
So let's clarify. I remain of the view that, you know, Britain manufactures and creates great services that are valuable throughout the world. We should be proud of our world-class industries. It's a global market that we operate in, and I'm not pessimistic about our opportunities ahead. Clearly, we need to make sure that we don't become completely fixated by the next few months and have people just make decisions because they feel uncertain. And I think, you know, every day that goes past as well, there are two sides of this equation. You mentioned about disappointments about whether being punished or not, concerns about that. Obviously, we saw the BVI, the German industry equivalent to the Investment Association here in the UK, looking for access to our markets this week and making a big play for that. We need this is a two-way street here. I don't think the European Union is a static situation. We've obviously got the politics in Italy and Germany and Spain, to name but a few. I still believe that, you know, there is a way forward. It's just without being able to see what that is from the politicians, it would be naive to say, yes, it's all fine.